I apologize for the delay. We were in session a little longer than we anticipated today, but we will get this informational hearing on banking in the medical cannabis industry. We look forward to having a robust discussion. I know members will be coming from a number of different committees to join the discussion as time permits. So I will just begin with thanking everyone for being here today, and I had some opening remarks. We'll then turn to my colleagues that are present to see if they have any opening remarks, and we'll go into panel one. I'd like to thank the members of the other committees that will be attending. They're not here yet, as well as thank members in the audience and the public who are here with us today. California has come a long way in reorganizing our medical marijuana laws, and I applaud my colleagues who have spearheaded this issue to achieve balance between state interests and local control. We now face an issue that isn't new. The Board of Equalization and local governments have reported the problem of having to accept and safely store large quantities of cash used to make tax and fee payments. This is not an issue accounting for just headaches in accounting, but a major public safety issue as well. Disparities in other medical marijuana businesses are potential targets given the amount of cash that they may have in sight. And considering many of these locations are in the midst of our communities, this creates a great headache not only for local law enforcement, but also for public safety throughout our communities. Dispensary owners face the fear of potential robbery as they carry large amounts of cash to pay taxes. In Colorado, these fears have spawned a cottage industry of security companies that specifically serve dispensary owners. I have also talked to dispensary owners and growers who have had to set up front businesses in order to pay their employees payroll and associated taxes. Yes, that's right, money laundering designed to pay state and federal taxes. This should not be the norm. Many potential solutions have also been discussed, yet each solution carries significant risk. The federal guidance issued to banks known as the Cole Memo and FinCEN guidance, rather than give financial institutions the safety and clarity they need, may have only compounded the confusion. The Fourth Corner Credit Union versus the Federal Reserve Bank of Kansas City decision denying Fourth Corner access to the Federal Reserve System also pointed out that the federal guidance does nothing to overturn the fact that marijuana is still illegal under Controlled Substance Act at the federal level. Financial institutions that bank this industry take on significant risk, and even if they can avoid legal pitfalls of federal law, face enormous compliance costs. Often these costs far outweigh any advantage of serving this industry. These legal risks and compliance costs would be similar if the state of California established some type of state-run bank, as we've heard in the past, besides other potential problems with that idea. Several bank alternative solutions have arisen, including kiosk-type ordering systems, mobile phone applications, and digital wallet-type payments. I have even heard discussions of potentially using digital currency as a bridge to banking services for medical marijuana industry. Digital currency could assist with taking cash out of the system, but these types of transactions would still need to comply with federal anti-money laundering laws. However, all these alternatives risk taking high levels of cash value and putting them into a system that is still not facing strict compliance or regulations that make sense. I think we all share the same outlook and the goal that the best solution is for Congress to establish a safe harbor for banks and credit unions to work with this industry. Until federal law changes, anything we do at the state level faces immense potential risk of interference by federal authorities. I look forward to hearing from our panelists today, and will open up time to my colleagues for opening comments. Seeing no comments at this time, we will start with our first panel. And that will be Jan Owens, Commissioner, Department of Business Oversight. It's a panel of one. We need to turn our mic on.
Good afternoon, Mr. Chair and members. I'm Jan Owen, and I have the privilege to serve as the Commissioner for the California Department of Business Oversight. Thank you for the opportunity to share some thoughts as the state's bank regulator about financial services for medical cannabis industries. Access to banking services is one of the most interesting and difficult challenges now facing the medical cannabis industry and financial institutions and state and federal regulators. And it's probably going to grow more so in the coming years. California pioneered the medical cannabis movement in 1996 when voters enacted the first legalization statute in the United States, Proposition 215, known as the Compassionate Use Act. Since then, 22 states and the District of Columbia have enacted laws that decriminalize, at least to some extent, medical cannabis cultivation, distribution, and use. Another 4 states, Washington, Oregon, Colorado, and Alaska, have legalized recreational use of marijuana. California and 5 other states will have the opportunity to vote on legalizing marijuana for recreational use this November. And the folks that follow these things closely say California has the best odds of passing the measure. Arizona, Nevada, Maine, and Massachusetts are the other 4 states. As legalization spreads, the pressure will increase to figure out a way to bank legal marijuana businesses. Here's the big reason, probably the main political reason of why this is so important. The lacking of banking creates a public safety and worker safety problem. Because it's spurred by banks, the legal marijuana industry is bulging with bags of cash. That not only increases businesses' security risks and their vulnerability to crime, it poses a broader threat to public safety. For marijuana businesses, the cash problem also makes it more difficult to pay vendors, employees, and taxes. Board of Equalization representatives reported that one medical cannabis business paid its taxes by bringing $200,000 in cash to a district office. Armored vehicle delivery of marijuana businesses cash has become a cottage industry. In California, the amount of that cash is considerable. According to data from ArcView Group, a marijuana market research firm in Oakland, California generated $1.3 billion of legal marijuana sales in 2014. That was almost half of the $2.7 billion nationally. Our state is also home to about 1/3 of the country's dispensaries. And California has the nation's highest number of medical cannabis patients per capita, 29.3 for every 1,000 residents. Clearly, this is an important issue to our state. Here's the main point I want to make today. This problem cannot be effectively solved without action by the federal government. Any fixes tried by states and private enterprise will only be at the margins. They may be effective, they may not be. They may also create unintended consequences. In any event, the only way banking services will become widely available for legal marijuana businesses is if the federal government changes federal law. The problem really is 2 words. Schedule 1. According to the data from the U.S. Treasury Department's Financial Crimes Enforcement Network, also known as FinCEN, at the end of July 2015, 266 out of 12,000 banks and credit unions had active accounts with marijuana businesses. That means just 2.2% of the country's banks and credit unions served legal marijuana industry in 2014. Why has almost all the financial institutions closed their doors? The answer, again, boils down to 2 words, Schedule 1. The Federal Controlled Substance Act, CSA, of 1970 makes possession, cultivation, and distribution of marijuana a federal crime. Section 812 of the CSA lists marijuana as a Schedule I controlled substance. That reflects the federal government's view that marijuana is among the most dangerous drugs, has a high potential for abuse, and has no currently accepted medical use in treatment in the United States. The Schedule I lists putting marijuana in the same category as heroin, LSD, mescaline, peyote, and many more. So what does this mean for banks? It means that revenue generated by marijuana businesses, whether legal or not under state law, is considered dirty money under the federal law. As soon as banks accept it, they're laundering it. At least that's how banks fear the federal government could view these matters. Additionally, providing loans to such businesses carry added risk because those customers are subject to federal asset forfeiture laws if prosecuted for violating drug statute. All these risks, say bank officials, far outweigh any financial gain reaped from doing business with marijuana businesses. In the last 3 years, federal agencies have issued guidance related to enforcement of federal law in states that have legalized marijuana. Some observers have characterized this guidance as sufficient to convince banks to serve marijuana businesses. That characterization is misguided. The Cole Memo, the U.S. Department of Justice, in August of 2013, was issued titling Guidance Regarding Marijuana Enforcement to all federal prosecutors. The document has been dubbed the Cole Memo after its author, Deputy Attorney General James M. Cole. The guidance reiterated the federal government's view that in enacting the CSA, Congress has determined that the illegal distribution and sale of marijuana is a serious crime that provides a significant source of revenue to large-scale criminal enterprises, gangs, and cartels. But the Cole Memo made clear U.S. prosecutors should not focus on making medical cannabis busts in states such as California. The Cole Memo also implied states with medical cannabis laws could better insulate themselves from federal prosecutions if they erected alongside those laws strong and effective regulatory and enforcement systems to control the cultivation, distribution, sale, and possession of marijuana. The comprehensive regulatory regime enacted last year by the legislature and signed by the governor would seem to place California in that category. But there's a kicker in the Cole Memo. It says near the end, this memo does not alter in any way the department's authority to enforce federal law, including laws related to marijuana, regardless of state law. So here's the bottom line messages banks receive from the Cole Memo. Proceed at your own peril. That's not very comforting. In February of 2014, FinCEN issued guidance titled BSA Expectations Regarding Marijuana-Related Businesses. BSA stands for the Federal Bank Secrecy Act, enacted in 1970. The BSA requires banks to maintain adequate policies to help the federal government detect and prevent money laundering. Among other provisions, the BSA requires banks to file suspicious activity reports on conduct that could indicate money laundering or other criminal activity. The guidance sought to clarify how banks can serve marijuana-related businesses without running afoul of BSA. It offered suggestions for what banks could include in due diligence reviews conducted before deciding to serve bank or marijuana businesses. The memo also listed red flags that could signal a high priority need to file suspicious activity reports on a marijuana business. FinCEN officials said the guidance could increase legal marijuana businesses' access to banking services. Frankly, it hasn't worked out that way. While the FinCEN guidance might work better to ease banks' fears than the Cole memo, the fact remains marijuana is a Schedule I drug. From the bank's perspective, a big problem with guidance like this is that it can disappear or be reversed at the blink of an eye or after the next election. And the federal government marijuana enforcement history has not been marked with consistency. The Bush administration pursued a hardline approach. In 2007, 2008, federal officials cautioned banks to avoid doing business with marijuana businesses. Under President Bush, the U.S. Drug Enforcement Administration, or the DEA, stepped up its raids on California medical cannabis growers and sellers. The federal government softened its stance at the beginning of the Obama administration. The U.S. DOJ said it would stop making prosecutions of medical cannabis customers and dispensaries a focal point. But the DEA raids in California continued in 2009. In October of that year, the U.S. DOJ did issue a memo to prosecutors advising them not to focus resources on cases that clearly involved compliance with state medical cannabis laws. Then, in 2011, the federal government shifted back in the other direction. It advised its prosecutors they could target marijuana businesses, or at least the bigger ones. In October of that year, federal agencies in California launched a major crackdown against such businesses. Some examples are, in Los Angeles, federal prosecutors filed criminal charges against a North Hollywood dispensary and 3 civil lawsuits against sellers who operated in an Orange County strip mall. They warned 38 other store owners to stop selling within 30 days or face prosecution. DEA agents raided a cultivation collective in Mendocino County, armed with assault rifles and chainsaws. In Oakland, IRS officials told the Harborside Health Center's dispensary that it was a criminal drug trafficking operation and could not deduct normal business expenses. The history of inconsistency, of course, helps explain why banks have not been willing to jump into the medical cannabis sector. Are there glimmers of hope? Access to banking and payment systems is not a completely lost cause for legal marijuana businesses. In Colorado, the state in 2014 chartered Fourth Corner Credit Union to serve legal marijuana businesses. However, the Federal Reserve last July rejected the institution's application for access to the Fed system. That same month, the National Credit Union Administration denied Fourth Corner's application for deposit insurance coverage. Fourth Corner challenged both actions in separate federal court lawsuits. In January, it lost its case against the Fed. The NCUA action remains pending. Meanwhile, private enterprises have stepped in to provide payment-related and other services for legal marijuana businesses. One such service is called a cashless ATM. As described in a January 28th posting on the Payment Pop website, cashless ATMs function like PIN debit transactions that allow merchants to give customers change for on-site ATM withdrawals. It's similar to getting cash back at the grocery store. Here in California, Kind Financial is providing kiosks to marijuana dispensaries. The kiosks are sort of like cash registers. Customers deposit cash directly into the kiosks to make a purchase instead of handling that cash to the workers. The kiosks are seen as helping to address the safety issues associated with the all-cash nature of marijuana businesses. Mobile applications also have emerged to facilitate payments. Under this approach, dispensary clients set up prepaid card accounts. They then use their smartphones to make the purchases, and the dispensary debits the prepaid card account. Some companies also offer legal marijuana businesses merchant cash advances to help them deal with short-term cash flow needs. These cash advances are sort of a business equivalent to a payday loan. The lenders provide the business cash and get repaid via a specified percentage of the borrower's receipts. On the banking side, we're seeing the emergence of startups that provide software and consulting services to help banks make sure they comply with all the anti-money laundering requirements. These are all positive developments from the marijuana industry's perspective, but we don't believe they will make a big dent in the banking access problem. Potential solutions. The solutions do lie in Washington, D.C. There are two primary options. The first one is a safe harbor. The federal government could enact a law that provides banks and credit unions a legal safe harbor if they serve legal marijuana businesses. The safe harbor would immunize financial institutions against civil and criminal liability under any federal law or regulation solely because they serve legal marijuana businesses. Such a law could also prohibit federal regulators from terminating or limiting deposit insurance for banks and credit unions solely because the institution provides financial services to marijuana businesses operating pursuant to state or local law. Last year, nearly identical versions of such a safe harbor law were introduced in the House and the Senate. Neither bill advanced very far, and it's unlikely Congress will act on the issue, at least not till after November. Some observers expect a banking service plan will eventually succeed, especially as legal marijuana industries expand. The second, perhaps cleaner solution would be for the federal government to take marijuana off the list of Schedule I drugs. But while that might be a cleaner approach policy-wise, politically it's probably less feasible at this time. That approach last week picked up support from former U.S. Attorney General Eric Holder. That development has surprised a lot of people. Thank you for the opportunity to testify today and for tackling this complicated issue. I welcome any questions and look forward to continuing a dialogue. Thank you.
Commissioner Owens, thank you. Any questions from my colleagues? Mr. Hadley.
Commissioner Owens, thank you very much for coming today. Thank you very much for coming today. And recognizing your very clear message that the solution is in Washington on this issue, are there any legislative or regulatory actions that other states have taken to try to address, manage, mitigate any of the issues taking place in their states?
A couple of my colleagues have had meetings with, and informal meetings with their banks and credit unions to talk about the Cole memo, talk about FinCEN guidance, and then tell them that, that it's, however, it's still a Schedule I drug and it's still, it's still under, you could be federally prosecuted. That's the first thing Washington State has done. They've tried to disseminate information. The Oregon legislature just passed a resolution asking for forbearance, and the authors of it will readily acknowledge that it was purely a political move, but I think it was a joint resolution in Oregon, but those are the only two things. I know the state regulator on the credit union side has been trying to work with Fourth Corners Credit Union in Colorado as well.
Commissioner Owens, thank you so much for your testimony today. Seeing no further questions, we'll move on to our second panel.
Thank you.
So I'd like to call up Sean Louise, President of California Cannabis Industry Association. Lisa Salon, General Counsel, United Cannabis Business Alliance Trade Association, and Hezekiah Allen, Executive Director of California Growers Association. Each panelist will be given no more than 5 minutes each, and we'll reserve questions until the end of all the panelists' statements. Thank you. Mr. Liu.
Okay. Thank you. Appreciate the opportunity, Chairman DeBobne, for having this hearing here today. My name is Sean Luce. I'm the Chief Operating Officer of Berkeley Patients Group. We're a medical cannabis dispensary in Berkeley. We've been providing safe access to medical cannabis for over 15 years now. I'm also the current president of the California Cannabis Industry Association, so I'll be speaking both to my experience operating businesses here in California and the experience of my members. So today I want to really talk about some of the specific issues that our members have faced, all because of their lack of banking. But I'm going to be leaving their names out for public safety reasons. So every day in this state, our members incur numerous risks to their safety and the safety of their employees because of the lack of banking. The medical cannabis industry in California is a billion-dollar business. Yet this industry has been shut out of the financial system, leading to countless business management issues, but more importantly, the lack of banking access has created a public safety problem. The business of providing medical cannabis to patients is not inherently dangerous, but conducting that business almost entirely in cash is. The widespread inability of cannabis businesses to access banking does not only pose a serious public safety risks, but also presents a number of other practical problems. Without small business loans, merchant services, and other basic banking services, California's cannabis industry is unable to grow and develop like all other industries. The near complete lack of financial services is stunning the growth of the industry and causing the state of California to lose out on tax revenue and jobs. Opening up banking access to the cannabis industry will better ensure security for the industry and patients, allow for easier accounting and financial transparency, and provide the industry with more resources to invest in our state and local economies. Now, some of the specific issues that we deal with on a daily basis start with the most simplest of things, storage of cash. You can't get insurance policies to insure large amounts of cash. Obviously, if we were in the bank, we'd have the FDIC protection with our money. But our member businesses are forced to sometimes house hundreds of thousands of dollars, particularly as we prepare to make tax payments and things. We have to hold that. We hold it in our safe, so we have no protection, no insurance on that. Then we've seen things that range into the form of violence. We've recently had an incident where a lab employee was picking up a cash payment from a dispensary, exited the dispensary, was walking back to their car, and was attacked with a hammer, and somebody trying to steal the money that they had in their briefcase. Then we have other things less sensational as violence, but more everyday grinding, wearing away at our businesses. When you are taking in all your proceeds in cash, or a significant amount in cash, it has to go back out in cash. So we're forced to then pay our vendors, pay our service providers, pay them all in money orders in cash, pay our employees in cash. So that's very, very time-consuming. It takes a lot of energy and just wastes time that these businesses could be investing in themselves and growing and helping their patient members. Another thing that we have to deal with then is paying our taxes in cash. So obviously, all retailers are paying the Board of Equalization. For some bigger stores, this is $1 million or more per year, and this has to go to them in cash. If you're lucky enough to have a relationship with an armored car provider, you can use that, but many armored car providers will not deal with this industry. So now we're forced into a situation where we have to remit hundreds of thousands and sometimes millions of dollars in taxes in cash, and we don't even have the safety and security of an armored car service to deliver that for us. So there's also been another sensational sort of news item that happened about a couple years ago now. But we saw a dispensary operator from Southern California who was kidnapped and tortured and mutilated in the effort to find where he was hiding his money. Things. And that person did survive, but they were gravely injured in the process. So these sorts of things are avoidable. And it's these public and private safety issues that we face every day that are really our guiding force for our concerns here. And we really do need immediate attention. Now, before I conclude my remarks, I would like to make one last recommendation, and that's along the lines of these alternative banking solutions. Now, I'm aware that the legislature may be considering several pieces of legislation regarding alternative banking solutions aimed at addressing the industry's inability to bank. And while I can appreciate the search for solutions and looking for answers, I would strongly caution against any legislation that would mandate any specific banking solution unless we can be assured that it will truly improve access and security for the industry and be a real solution and not just another workaround. Many products like kiosks and cashless ATMs and things like that, they're better than nothing for some operators in this industry, but they're certainly not the perfect fit and the right solution, and I don't think we should be going down that road as much as really fixing the core of the problem and trying to work with the federal government to really fix this once and for all. So, as I said, the truth is these challenges cannot be solely addressed at the state level. We really must collectively push Congress to enact legislation that will provide a comprehensive solution to allow banks and credit unions to perform financial services for the medical cannabis industry. In closing, I want to again thank the chairman and committee members for bringing this important issue forward. The California Cannabis Industry Association is committed to partnering with you to identify solutions to address this very critical issue to our state and our industry. Thank you.